So we're going to learn to trade plan. We're going to identify key levels. In the pre-market, we're going to say here are our key levels. As the market develops, similar to what we did at 1075, here's a key level for this market, this developing market. Here's where trade opportunities are. Here's where target opportunities are. We're going to learn the if-then game. What I have found is that the only way I've been able to control my trading, be patient, and actually take the trades when I want to take them, is playing that if-then game. Because what I'm telling myself ahead of time is, this is my scenario for a trade. If this happens, then I will do this. And it could be if this, then I will do this. And this is how I will manage it. This is where my target will be, etc., etc. It will develop patience. It will improve your risk reward. And in my experience, it's the key to objectivity. And we're going to get into trade execution and management, using order flow for trade management and entry confirmation, using composite and developing volume profiles and other key levels for targets, stops, and scales. And it's going to become kind of a circular process for us, where we are constantly reading, planning, and trading. We're always reading. We're always adjusting our if-then statements. Are they still true? Are some of the assumptions we made about the market based on what's being accepted, what's being rejected, still true? That's how you stay consistent reading the market. That's how you go from day to day to day and with continued success. And it's how you identify change in the market. And it's why, I cannot stress this enough, it's why a lot of just pure indicator systems fail people. Because you know that there are so many educational systems out there, methods or whatever you might want to call it, that rely on indicators and specific setups. And they're the secrets your broker doesn't want you to know, and they're all kinds of marketing ploys. However, none of those, they're all easy, and people follow after them because they say, all I need is a couple of different indicators and I'm going to be successful. I saw it in the person's webinar. I saw it in their historic examples of how this works. I'm going to be successful. And what I will tell you is, again, the only difference between those who are successful in trading, and the numbers don't lie, and those who are not successful, is that those who are successful are willing to do the things that the others are not willing to do. And that is to take the time to learn how to trade. It means that you need to read, you need to have context, you need to develop your scenarios, and then you need to trade based on those scenarios. If the market does something different and you lose in a trade, then so be it. You take the information and you continue to read. If you lose in a trade, you look at it and say, what does that mean? Does it mean this market is changing context? Does it mean that I read it wrong? Did I miss a low volume area? Did I miss a print reading? What happened that caused that trade to lose? And so you're going to reread to get context so that you can relook at the market and say, okay, I missed this part, and I am now looking to take a long here or short here. And if the market does this, and if the print does this, then this is where my trade is going to be. But what I want you to see in all this is, this type of trading is all based on what buyers and sellers are doing. And I go back to the very primary fundamental, which is when you place your trade, the only thing that is going to make your trade win or lose are all the trades that are coming in after you. If you are relying on an indicator to tell you that price is going to go up or down, and for example, in the context of this last trade, I said one of the things that made me nervous about this trade was weakness, weakness. I mean, this combination right here, and we're going to go through this tomorrow and Friday, this combination right here said, beware, get out. Even though it showed unfinished at the top, I saw this little volume nodule that tells me, since price isn't moving any higher, this tells me that there are in fact real sellers stepping in at 19.50. So any long has some additional risk. And where might this go? Might come all the way down to VPOC 15.15 quarter. If it comes through VPOC, I got a little bit of a low volume area there. Let me just take a look at something. But we could move all the way back down. Let me just show you. What do I have here? I have a distribution. It's not a perfect bell-shaped curve, but I've got the majority of my volume of the day right through here. I'm getting a distribution. I've got VPOC near the center. There's a potential for price to come all the way back down here or to here. And if it does, that's telling me something. That's telling me these sellers are having impact. And remember I said I would look to get back in right here at VPOC? I still don't like this print, but that's where I'd look to, I'd look for a tag of VPOC and get back in there. So again, everything that I do is about reading the context of the most current sentiment, interest of the buyer, the buyers and sellers, the current buyers and sellers. Because I know that if I understand what they're trying to do and where their interests are, then if the print shows me to get in at a certain place and it continues to support that trade, then my target's likely to be a really good target. I'm likely to win in that trade. Either the buyers or the sellers will come back in to support that trade. So everything I do, everything I've learned to do very painfully and through much loss is by learning how to stay objective, and regardless of what I think, regardless of how fast I see the market moving, know that the market can do anything at any given time. And my best way of trying to follow that is to stay true to the print and what the buyers and sellers are doing so that I can identify change and trade with it. But if you look at what happened here, because I have an if-then scenario, right? If I would have got into that trade, I would have gotten stopped on that trade. But what was my expectation after that? My expectation, I said, was if we come through this area, my expectation is we're going to at least come and test and tag 1525 VPOC. And you can see clearly what happened. The fact that right now price is moving away from VPOC, the print would suggest that it may not be done to the downside. So if I were long at VPOC, as soon as I got a print up here that showed weakness at the offer, strength at the bid, I would scale or close that trade. That would be my trigger, because there's still some risk to the downside, and because of this, I automatically start drawing this picture. There's my distribution. We have extension above, we have some below. My short comes in on the other side of this level right there. I mean a longer time frame potential short. If this trade can keep going, this is unfinished, though I might meet resistance up here. So my first scale on this trade, this is getting a little choppy. My first scale is going to be when the print tells me to scale. When the offer gets weak and strength comes back into the bid, I am automatically scaling. So if I were in with 5, when that scenario happened, bada boom, bada bing, I'm scaling. I'm scaling 3. Because my expectation now, the potential, it may just keep going up. I've left 2 on, but the potential now is for this to come back to this print and this print. And there's no reason in the world for me not to take that profit. Yeah, I'd love to have this go 10 points. But if my target for the day is $500, I've just made a good portion of my daily target on that trade. Plus what I made on that initial trade at 10.75. I lost a little bit on that trade at 16 quarter. I lost a little bit because I got stopped, but I just made that back. So I'm at least halfway and likely 2/3 on the way to my daily target. That's awesome. And it's 9:48 in the morning, which, by the way, we're going to look at taking a break here soon. So I have a natural level here or thing coming up where we can take a break. And then when I come back from the break, I'll look at the questions and we'll start into the rest of the content for the day. So repetition, repetition, repetition to hit our target. That's why you see this arrow continuing to strike the target over and over and over again. I believe repetition is important. So all of this, I was trying to think of an analogy that people could relate to, and I don't know who fishes and who doesn't, but to me it was a little bit like fishing, all of this, trading. And that is, you take your boat onto the water, right? You're looking for a spot, you've kind of had some experience, you're using some tools, to show you where you might want to trade, where fish might be. You're checking the weather, you're checking different charts, depth finders. You're using your tools to kind of get context of the lake and where you might have a good opportunity for fishing. And then in that, you go out and you find your spot. You say, based on my tools, this is where I want to make a trade. And in fishing, you say, this is where I want to fish. So what do? You set your bait. You throw that out there. Typically, it may be a limit order, and you say, come and get it. Come and get it. And all the while, you have no idea what's really happening around that bait. And just like in fishing, you have no idea what is happening. And in trading, where are the buyers, where are the sellers? You can see the print, but you have no idea who's standing on the sidelines. So there's a sense of not knowing. You've done your work, you kind of think things are going to work here, but once you drop that line, you don't really know what you're going to get. You don't know what's going to bite. And if you get a bite, you don't know if it's going to be the fish you're looking for, or if it's something small, et cetera, et cetera. You just don't know. So there's a sense of uncertainty there. All the while, you're watching this little indicator, and you're watching your print, whatever it is, your trigger that tells you to do something. And when that print or when that trigger says to do something, like the bobber, right, starts giving you signals, time to do something, after you watch your indicator and it gives you your signal, that's when it says it's time, you take your action and you manage that interaction, right? You take action, boom, you're looking to set that hook, and you're managing that interaction with your target. And then you do it again, except maybe you're kind of looking for a new spot. But you keep going through that process of getting context. Is this still the right spot? Should I go to a new spot? Nothing really is happening here. I'm using my tools to find a new spot. Once I have my spot, I'm setting my bait, I'm putting it out there, I'm waiting for the indicator. Once the print or whatever you use to get into a trade tells you to get into a trade, boom, you're into the trade, and now you're managing that trade. And it's a process that we keep going through over and over and over again. So that's what we're going to focus on, is that repetition. Reading, planning, if then, and then executing and taking the trade based on the OFA tools, the print, the order flow, volume cluster analysis, momentum analysis, and the volume profile, and what we know about the volume profile and what it's telling us in its structure, and where price is most likely to go, where we can expect the other side to step in, that type of thing. So this is a good spot for a break. It is 9:52 Central, 10:52 Eastern. So we'll look to come back at 11 o'clock Eastern and continue our mornings. Does that sound good? And then I'll come back to the some of the questions. All right. We will be back at, right around 11 o'clock Eastern, 11:02. We'll give people a good 8 to 10 minutes to take a break. I'll see you in a few. I started talking about this yesterday, and actually the first day, which was the way that I trade is by listening to buyers and sellers. And so everything that I've done in my own trading, and what this course is based on, is learning how to read the context of the buyers and the sellers, because it is the only way that I have found to keep myself objective and not to be like, the cowardly lion in trading, and to feel like I have a sense of control over what I'm trying to do. And it honestly is the only way that I have found to have success in consistent success in trading. And so everything that I've done in terms of building uh, an education process around volume profile on the print has been towards getting out the information relative to the fundamentals. And one of the biggest one is you got to listen to buyers and sellers. They are the truth in the market. Your ability to manage your trades, your ability to manage your risk, your ability to manage the profit, it is, in my opinion, my experience, is significantly at risk unless you're using these tools that we're going through here. So any questions about that here? Let's see. In building volume profile analysis composite over a long period of time, seems quite slow beyond 60 days. Is there something I'm doing wrong? You're using a 30-15 probe rotation, no. Yeah, it takes a long time to build. It's looking at the print, and it's not an issue. It does take a little bit of time because there's a lot of data there, and something that DB and I have started to have a conversation about. So the answer is I believe that there's going to be a maybe a faster solution for you. I don't know when that'll be, but it's something that we are certainly talking to. But the one that you're currently using, it'll work, and it's what I'm using. It'll be in the template that I provide today, but it can be a little slower because of all the data that it's using to pull from. Can I indicate when I would ever use a high volume node or high volume area for entry? That was today. I mean, this was one of my scenarios today. Was if price came through this level at 16 quarter, I would use look to use VPOC as an entry point, because if it bounces off of VPOC, if it comes down any further, I'm just out, because the probability is it's going to come all the way down through value and down to the bottom of this volume profile. But if it holds here and I get a print that shows it'll hold, then the likelihood is this is going to be a pretty phenomenal trade. So that's a case when I would use a high volume area for a trade opportunity. Or if price had moved, say, 20 points or more on the day, and it just broken through a low volume area, I don't care if it's trending higher or lower, it broke through a low volume area and was headed towards a significant high volume area. We're up to the 20 plus point range. I would look at that high volume area, and I would look for a tag of that high volume area and look to take a trade in the other direction. So after a large move, I would look for a high volume area to provide a basis for trade in the other direction. So I would use previous days. So we're looking at volume profiles. We can do that. I would look at previous days high volume areas, specifically VPOCs, as an opportunity for trade. You can see the first one here, 1525, came all the way back to 1150. So that was a good trade. My next one was today's VPOC to the downside, looking for a long at 1525. And you heard me talk about that as I talked about a potential long at 16 quarter, 1675. There was a low volume area. You can see that that's now since gone. Looking to take the trade as a bounce off of this high volume area, the VPOC. I've talked about weak in one side and strong in the other. What is an LVN? LVN is, some people call it low volume node. I call it a low volume area. LV is low volume node area, kind of means the same thing. Talked about weak in one side, strength in the other. Any comment about big volume in one side, which is a trap? Traps, at least in my experience, traps usually come over time. Traps aren't something, in my experience, that happen in one bar or two bars. Traps develop, so it's usually what I'll see is a fairly decent rotation, fairly decent price distribution rotation, and I'll see selling happening at the top, buying happening at the bottom, and in my experience, it's either one or two things are going to happen. It's either buyers that are kind of collecting shorts for a stop run, or shorts collecting longs for a stop run. In those cases, we're typically going to see an explosion of price and an extension of price, probing into new levels when we have a trap set up, simply because it's not a stop run. One side is looking to gain enough stops to really push price in their direction. So traps aren't something to me that happen in a bar, one bar or two bars on the OFA. It's something that happens over time, and what you're watching for is rotation in an area. You're watching for your nice distribution, bell-shaped curve, and you're seeing buying coming in at the bottom. You're seeing selling coming in at the top. You just need to watch the print and understand that two things you want to be wary of. When price stops rotating through VPOC in that rotation, the high probability is, let's say price is coming down. It reaches the top of a distribution, it starts coming down, and it tags VPOC and it can't move any lower. It can't move any lower. You can see pressure at the bid, but it can't move any lower, and starts moving back up towards the low volume area, the top of that rotation. There is a high probability that there's going to be a breakout trade on the other side of it. So as soon as you start seeing that happen, more than likely there's going to be a breakout. Also, if you're trading and you're noticing at the bottom strength coming back into the bid at any given time, you're at the top, strength coming back into the offer, it's another good sign that there likely is going to be a breakout. Now, in that scenario where price moves from bottom to top and top to bottom, let's say it moves from bottom to top and price moves up and you start seeing strength back into the offer, there may be a stop run at that point. The scenario that I like the best for a breakout as a trap is when buyers and sellers are back and forth, and we see price bounce off of VPOC and move towards the low volume area. Those are the opportunities I really like as a breakout. You see price coming right back down to our current low volume area, 1975. What I want you to pay attention to now is we have a nice finish, a nicer finish to the upside. We've attempted twice to get up there. A nicer finish to the upside. Our print, weak. What I'm looking for now is a potential of this level at 1975 not holding, and for price to come through 1975.